Gold could hit $2,000 by the end of the year, with the precious metal bound to see record investments in the second half of the year. That's according to the Thomson Reuters GFMS survey out today. Well, for more, I'm joined by Philip Clapwick, our global head of metal analytics. Philip, thanks very much for being with me. $2,000 isn't really that far away for an ounce of gold, and risk aversion continues to drive investment. Is there anything worrying out there, or are we just going to charge ahead on gold prices?
Well, we're 10% away at the moment. We've been above 1900 within spitting distance of the price, but we've seen a retracement recently with a stronger US dollar. I think that's the one question mark against gold's move higher in US dollar terms is, do we now see a period of US dollar strength and gold treading water for a bit? But I think looking medium term, prices are still going to go up. They're going to go higher, and I think we will see $2,000 probably taken out this year.
Now, your survey is also forecasting record investments in gold. Where is the real demand coming from? Is it broad-based, or are there some very big players in there?
Well, it's curious that if you look at gold investment demand, it's really quite widespread now. It's no longer really concentrated in just ETFs or by, shall we say, fund investments on the futures market. We're now seeing significant demand for gold, particularly in bar form, in coin form, and that demand is occurring not just in Europe and North America, but also here in Asia. China in particular has been a fantastic growth market for gold investment demand.
Now, we're talking about investment. Where do the central banks fit into this? Are there some new central banks coming in and buying up gold?
Yes, we're seeing central banks now operating very much on the buy side of the market. The selling we had seen from Europe has dried up, and that's left those buyers of choice really the only active players in the market. And that's led to central bank demand now becoming another important pillar for the advance in gold prices.
Any new central banks coming in to buy up gold?
Well, we've seen names such as Mexico, South Korea, coming into the market on the buy side, and I wouldn't be surprised if we see some further new names in future.
You mentioned China earlier as a big buyer, and I tend to think of China buying up jewelry. We also see that here in Asia with India. Is buying jewelry and retail demand a sizable factor?
Yes, it is. If we look at the jewellery market, notwithstanding the strong advance in gold prices, here in Asia in particular, there's been really pretty good jewellery demand. We're seeing strong demand for gold jewellery, 22-carat jewellery, for example, in India, 24-carat jewellery in China. And this jewellery is being bought in part as a form of savings.
Interestingly, if we move from the buyers to actually the suppliers, what about capacity from gold miners? Is that affecting the price at all? Is there enough capacity out there?
Well, it's not affecting the price at the moment. What we are seeing is mine production responding now quite strongly to the stimulus of higher prices and very strong margins for the producers. And we're seeing further growth, for example, in mine production this year. But if we look at the totality of demand, mine production is actually falling short of global demand for gold, and that difference is largely being made up through scrap supply, which has grown over recent years.
Final note then, gold, you're saying 2,000 by this year, but could we see the price really skyrocket in the year ahead?
Well, I think a lot depends upon monetary policy in the major economies. A lot depends upon whether we see further hits to confidence in fiat currencies. If we do see that, and in particular if we also see inflation starting to worry people, not perhaps just in China or India, but also in Western countries, then we could well have a situation where gold goes viral, if you like, and we see significantly greater upside.
We'll leave it there. Philip Clapwick, thanks very much
Pleasure.
for being with me. I'm Tara Joseph. This is Reuters.